That is why Erika Kirk is the CEO of Turning Point USA. She didn't become CEO because she was qualified. She didn't become CEO because it was Charlie's dying wish. She became the CEO because I'm going to show you exactly why Erika Kirk is the CEO of Turning Point USA, and you will never be able to convince me otherwise. Not speculation, not theory, straight documentation. And you tell me if you believe what I'm saying and what the documents are saying or what they're saying. We're going to take a look at this form here. So this is a form called a 990, all right? It's a tax return that every nonprofit organization has to file with the IRS every single year. It's public. Anybody can look it up. These are financial disclosures that organizations like Turning Point USA are legally required to submit annually. And I've been going through TPUSA's 990s for days, going on weeks now, page by page, line by line. And I've gone through every single IRS documentation from every single Turning Point entity. All right. There's actually 4, but we're focusing on Turning Point USA Incorporated, the LLC's 990. Now, I've been looking for irregularities. I've been looking for patterns, and I've found something that is going to shatter everything that they've told us about what is going on about the life insurance policy of Charlie Kirk. This is a Schedule L. We're going to get right to it. So if you look up here, it says Schedule L, all right? Transactions with interested persons. So essentially, this is dealing with involved insiders, board members, that they do deals with. There's an entry in here. Essentially, these are loans, okay? So you can see here, it says loans to and or from interested persons, okay? So it says name of interested person. So that means that they're giving a loan to this company, GGLF 2023 LLC, all right? This stopped me, and it made me, I had to go through it a few times because I didn't quite grasp. I had to reach out to a buddy of mine and ask him because, you know, this isn't my wheelhouse. I'm not a tax advisor, you know what I mean? So this is new territory for me. But once I did, that's why it's taken me a few days to come out with this research, because this is something that shattered me when I realized what was going on. So look at this entry here. This is a loan to, okay, not from, it's name of interested persons. If it was for TPUSA, it would be of to TPUSA, okay? The interested persons for the loan is GGLF 2023 LLC. It's a loan for $350,000. And I'll zoom in there so you can see it. The original principal amount, okay, from Turning Point USA going over to something called GGLF 2023 LLC, as you can see right here. All right. Now, the purpose is a split dollar life insurance policy. All right. Loan to or from the organization. You have to understand what this means. All right. So the organization is always going to be referred to as TPUSA because that is the organization that is filing this 990. So any entity or mention of organization is always going to be the organization filing the 990 or the documentation to IRS. So it says relationship with organization, purpose of loan, loan to or from the organization. It's from TPUSA to GGLF 2023. And it says this line right here, read it with me. It says entity owned by president or CEO of the organization. So relationship with the organization, this entity, the LLC, is the entity owned by the president and CEO of Turning Point USA for a split dollar life insurance policy. So it's a loan from TPUSA to this GGLF 2023 LLC that is owned, the LLC, GGLF, is owned by the president standing of TPUSA for a split dollar life insurance policy. So they loan money to GGLF, who is owning that company, which is the president and CEO of TPUSA, for the original principal amount of $350,000 with a balance due of $355,268, $355,000. All right. It doesn't say entity owned by Charlie Kirk. It doesn't say entity owned by Charles J. Kirk. Entity owned by president and CEO and or CEO. Do you understand what you're looking at? They didn't tie this to a person, okay? Whoever holds this document, whoever holds the title of president and CEO of Turning Point USA owns this LLC. Charlie Kirk was the president and CEO. So Charlie Kirk controlled GGLF. You follow me, right? But what happens if Charlie Kirk isn't the president and CEO anymore? Because that person is just a title on this document. All right, look at it again with me. Entity owned by president, CEO. It has no name on it. And now I will say, in the filing, okay, if we go to the initial filing, it doesn't have, because Wyoming doesn't require the names of the people. It's a kind of like Nevada, like Delaware. You've been seeing in the news lately on social media, they don't disclose who actually owns a company. It's secretly hidden behind the filing, right? So that's not disclosed. But the original filing of this was through a tax law firm, okay? So let's get back to this document and let's talk a little bit deeper about what this is. They didn't tie it to a person. They tied it to a title. Whoever holds that title is the person who owns the LLC. Again, Charlie Kirk was CEO. He owned that LLC. He died. What happens if someone else holds the title of that LLC? Someone else controls GGLF. Someone else controls the loan to the life insurance policy. The money gets paid out to somebody else. That doesn't follow the person. It follows the title. The money follows the title. Why would you ever set it up that way? Why wouldn't you just write entity owned by Charlie Kirk? Unless you were planning for a scenario where Charlie Kirk wasn't the CEO anymore. Unless you were planning for something that exactly what had happened. All right, I'm going to show you the timeline so you can really understand what's happening. And so we can figure this out together, because I can't figure it all the way out. But I'll tell you what, I have figured out why Erika Kirk is the CEO, in my humble opinion, allegedly. So I need you to pay attention, because this is where it's going to get dark. All right. May 15th, 2023, the LLC of GGLF 2023, created in Wyoming, organizer of Stephanie L. Hooper. This was set up from Charleston, South Carolina tax attorneys who specialize in a specific type of tax law. Okay. Now, the founder is David Taylor, and I'm going to show you their firm's website, taylortaxlaw.com. All right. And an uncommon tax law firm. All right. And from the founder himself, says, I'm motivated by taking on a problem which others have said is impossible to solve, and which has a life-changing impact on our clients if solved. I solve the problem by being able to utilize 3 decades of experience. What is a great way to live life? By changing the lives of our clients. Why don't they have their information on their uncommon? What is an uncommon tax law firm exactly? You know, I'm kind of curious on what that means exactly. You know, what's interesting as well is that their staff has no mention of the people that sign the documentation as attorneys who actually are on the forms that you're going to see right now. Initial filing, okay? The initial filing for GGLF 2023 LLC from the Wyoming Secretary of State, it shows right here. Limited liability company. The organization is GGLF 2023 LLC. The name and physical address of the registered agent is 30 North Gold Street, Suite R. Mailing address is also that. So the LLC, GGLF, the loan company that took out the life insurance for the president and CEO of Turning Point USA, is the same address signed by Stephanie L. Hooper, working for Taylor Foley Law, okay, attorney at law, phone number, and everything. This is so crazy. Stephanie L. Hooper, look at where this company is located at. This is important for all of us to understand so that we can go through this together and you can understand the situation that's being had right now. A $350,000 loan went to a building that has no company name on it for GGLF. It's registered to other companies, and an art studio or what have you, Souvenir LLC, is there instead. That's actually has business hours. So they're obviously a location. They have, I don't know, they have an entity, right? There's pictures and stuff like that. I mean, I don't know if there's even pictures, to be honest with you. Anyways, let me get back to the timeline. So back to the timeline. TPUSA loans $350,000 from TPUSA to GGLF. This is essentially for Charlie Kirk. All right. The loan is for Charlie Kirk. March 2024, an annual report was filed and everything is normal. All right. Wyoming annual reported submitted active. May of 2025, Wyoming then sends a delinquency notice to GGLF 2023 LLC that nobody has paid, and those taxes of $60 is the amount owed. Then, so that's in May, then a month, 2 months later, 60 days later, the LLC is dissolved. So Wyoming dissolves GGLF for non-payment. $60 unpaid fee kills a multi-million-dollar structure. The beneficiary now does not exist. Okay. July 9th of 2025, $60. Nobody pays it. The entity holding a multi-million-dollar life insurance policy is dissolved over $60. Now, watch what happens next. September 10th, 2025, Charlie Kirk is killed. When Charlie Kirk dies, the entity does not exist anymore, okay? He's dead. The LLC has been dissolved for 63 days, and insurance beneficiaries does not exist legally because there's no president or CEO of TPUSA technically on that date, right? LLC dissolves. A couple months later, 63 days later to be exact, I think it is, Charlie Kirk is assassinated. Then 8 days later, Erika Kirk becomes the CEO, the beneficiary of the life insurance policies company, which is a dead company, all right? She's named president/CEO of TPUSA 8 days after her husband's murder, now also owns and controls GGLF 2023 LLC. Let that sink in for a second, okay? September 18th, 2025, 8 days after Charlie is killed, Erika Kirk is named president and CEO of Turning Point USA, which means that she owns LLC GGLF 2023. And then on December 3rd, okay, LLC is reinstated. Okay, someone brought GGLF back from the dead back to life. That person is Virginia Brown. There's no signature. It's a typed name. I have it right here. Okay. Wyoming Secretary of State, GGLF 2023 is effective dissolution 7/9/2025. And then December 3rd, 2025, Virginia Brown of the same Taylor tax law from registration. So they're running this registrations tax company out of, I guess, Wyoming, okay, for God knows why, filed 84 days after Charlie Kirk was killed. Someone filed the paperwork. Why? And why is it an attorney with no signature? And why is it a Wyoming company from an entity that's based out of Charleston, South Carolina called Taylor Tax Law? I stayed up for the last few days. Honestly, I've barely slept trying to figure out the answer to the question, why December 3rd? Why midnight? And what deadline were they racing against? Again, 7/9/2025, they were dissolved. 12/3/2025, they were reinstated. This is the life insurance policy company that received the loan from TPUSA. This is already self-dealing, okay? President of TPUSA gave himself a loan to his own LLC in the name of $350,000, which is illegal. That is a way for you to receive money without paying taxes. And who is going to question you loaning? Say your founders and all the other people, donors, they're not going to ask you and dive deeper into a company you gave in $350,000 to. Probably not very typical. All right. I'm sure big organizations give loans all the time to other companies. But GGLF 2023 served one or two purposes. There's two avenues here, and we're going to get deeper into it. But you must know that 90 days after Charlie Kirk had been killed would be December 9th, okay? Which is 6 days before this was signed, okay, by Virginia Brown, 6 days before. Under ERISA regulations, insurance companies have to make a decision on life insurance claims within 90 days of receiving the claim, okay? If you file a claim on the day that someone dies, the insurance company has 90 days until to pay or deny. So September 10th plus 90 days equals December 9th. December 3rd is 6 days before December 9th. But here's the thing. When Charlie Kirk died, GGLF was dissolved. It did not exist. Insurance companies cannot pay death benefits to an entity that does not exist. If the insurance company runs a basic check, all they do, they would see that the beneficiary LLC was dissolved. It's dead and gone, so they don't have to pay it out. But within 90 days, if they have and also keep in mind, they would have to redirect the payout to the estate. That doesn't necessarily mean that just because the LLC is dissolved, that they're not required to honor the payout. That's not necessarily true. But it would say that they would have to directly pay the beneficiary instead of the LLC covering up who the money's going to. Do you understand? Although it does say that the LLC is the president/CEO of Turning Point USA, it's very convoluted. They would have to redirect the payout, all right, to somebody else, not the LLC, unless someone resurrected the LLC before the deadline and unless someone brought it back to life so it could receive the money. But here's what actually kept me up late every single night. Actually, I haven't slept. It's 12:30 p.m. Pacific Standard Time, and I have not slept. I've been researching this all evening and morning. Who has the authority to reinstate a dissolved LLC? Only the owner. Who owns GGLF LLC? Again, the person that reinstated it is Virginia Brown, but this is an attorney, all right? The actual person who owns it is the president and CEO. Who was the president and CEO of TPUSA on December 3rd of 2025? Erika Kirk. She became CEO 8 days after Charlie Kirk was killed, 76 days before the reinstatement. So when the LLC was brought back to life at 12:05 a.m., I don't understand the urgency here. Why is it at 12:05 a.m.? We could find it right here, 12:07 a.m. I'm sorry. Wyoming on this third day of December 2025 at 12:07 a.m. has been filed for reinstatement. Do you see it now? Erika Kirk, it's her LLC. It wasn't Charlie's LLC anymore. It's not. Do you see why she's the CEO? If they're supposed to pay out $20 to $50 million to this organization that was taking money from donors into this as a loan, using it as a life insurance policy, it dissolved. I don't understand that part in particularly. That's way out of my depth. But I do understand the fact that the president it's not named Charlie Kirk, because you can't give a loan from TPUSA to Charlie Kirk's company. That isn't the way it works, because then he's not, like, first, they haven't even paid it back. There's still a debt on it. There's still a debt on the loan as of this time, as of the filing. All right. So all the way as of through 2024, they haven't paid anything. So that means two things: that Charlie Kirk had received money, or the president and CEO has received money, which was Charlie Kirk. And that way you don't have to explain to anybody that you're receiving more funds than your allowed income, that your salary. So this is double dipping. All right. Not only that, they use that double dipping funds as life insurance policy money in case something happens or if it was planned. Now, step one, Charlie Kirk dies. Okay. Step two, GGLF is dissolved, has been since July. The beneficiary does not exist. Step three, someone needs to find and file an insurance claim, but the beneficiary is dead. All right. Then you move to step four. Someone realizes we need to resurrect the LLC. All right. So they had Virginia Brown do it. Who owns it? The president and CEO of Turning Point USA. Then Charlie Kirk is dead, which is step five. 8 days after Charlie dies, Erika becomes the president and CEO. Step seven, now Erika owns GGLF. Now Erika can reauthorize the instatement. Step eight, the Charleston attorneys, the same ones who set this up in 2023, file the reinstatement at 12:05 a.m., 6 days before the insurance deadline. And then step nine, the GGLF exists again, so it makes the entity able to obtain the payout of the life insurance as opposed to the direct beneficiary. Then you have the insurance paying out $20 to $50 million. That money goes to GGLF and it's hidden behind the actual LLC. There's no name that we can find there because it's part of the state tax law. GGLF is owned by the president and CEO of TPUSA. The president and CEO is Erika Kirk. Okay. She didn't become CEO because she was qualified. She didn't become CEO because it was Charlie's dying wish. She became the CEO because that's how this was structured to work. That's how the money moves. Okay. She needed the title to own the LLC. She needed the LLC to collect the insurance, and she needed the insurance to get the $20 to $50 million payout. That is why Erika Kirk is the CEO of Turning Point USA. And it gets worse. There's actually a legal doctrine in Wyoming called relation back. When you reinstate a dissolved LLC in Wyoming, the law treats it as if the LLC was never dissolved. So it relates back to the date of dissolution, which means legally GGLF is now treated as if it was existed from July 9th through today and never dissolved, which means legally. So that's, through that timeline, that's why it was established within the 90 days. It never dissolved in the first place, which means legally the beneficiary was valid at the time of death. You get what I'm saying? Even though it wasn't, because of the loophole law, for the fact that if you back and resolve the dissolution, you reinstate the LLC, then that means that it was as if Charlie Kirk, who was the president and CEO, who died on September 10th of 2025, even though it dissolved in July, because of the state law on taxes, that means that Charlie Kirk is the beneficiary or the person who gets paid out. And that means that it goes into the LLC's hands. All right. So even though the LLC was dissolved 63 days before he was killed, they resurrected it to rewrite history, and they used legal fiction to make a dead company look alive again based off of the relation back doctrine to validate a beneficiary that didn't exist when the insured person died. And the only way any of this works is if Erika Kirk is the CEO, because that's who owns the LLC, because that's who controls the money, because that's what the Form 990 says. Entity owned by president/CEO of Turning Point USA, right here. Okay. So let me ask you something. Why did they let it dissolve in the first place? $60? A $350,000 structure holding a life insurance to pay tens of millions, and they let it die over $60? TPUSA has $150 million in revenue before that. Okay. So 800 employees, lawyers, accountants, the Charleston tax attorneys who set this whole thing up. Remember, I mentioned to you what they do. They specialize in uncommon law practices for taxes. All right. For 2 months, from May to July, nobody paid $60 for this life insurance policy. I do not believe that's an accident. I think that it was dissolved on purpose. What if the LLC needed to be dissolved while Charlie was alive? What if the only way to transfer control of GGLF from Charlie to Erika was to let it die, make Erika CEO, and then bring it back? What if the dissolution wasn't negligence? Because I don't think it was. This was carefully planned. What if it was the plan? I want to be very careful here. I'm not accusing anyone of any heinous acts. There's an accused shooter in custody. There's going to be a trial. I'm not accusing Erika Kirk of knowing about all of this structure. I don't know what she knew. I don't know what was told to her, okay? I don't know her involvement. I'm not saying this was murder for money. I'm not saying this was money for, being ready for the situation, but I am saying that the structure was built specifically like this, and I'm saying it was activated exactly as it was designed, just as Taylor Foley Law says they do uncommon tax law practices. I'm saying, who knew is what I actually want to know, is what I'm asking. Here's what really gets to me, is that this is donor money. Regular people sent $50, $100, $1,000 to TPUSA because they believed in something. Sure, there's plenty of billion-dollar donors that are giving millions for their own intentions, and that happens in every organization for the most part. But most of this money comes from good people, hundreds of thousands of Americans that are conservative, believe in conservative values, and that money funded the premium on this life insurance policy that could have been double acted as hidden payments without taxation to Charlie Kirk or the president of the company. There's multiple ways that this could be used here. And now someone's collecting or going to collect through the LLC $20 to $50 million from Charlie Kirk's death, and I want to know if the donors knew. Did anyone tell them that their money was going into a life insurance scheme structured to pay whoever out that held the CEO title? Did anyone disclose that if Charlie Kirk died, the payout would go to the organization of GGLF of a Wyoming LLC controlled by his successor? I don't think they knew that. I don't think that anyone told them, and I think this was hidden on purpose and in Schedule L of Form 990 that nobody really reads. And now the donors are going to find out that someone from some other place that they don't even know who the hell I am, this is how they're going to find out, because I'm bringing the evidence. This is so strange. They have like multiple addresses, one in Wyoming. They're using it as a registered agents company. I mean, these are not amateurs. These are specialists in creative transactional structures. They knew exactly what they were building, and it worked just how it was designed. So why is Erika Kirk the CEO of Turning Point USA? Because the Form 990 says entity owned by President CEO. Because if GGLF was dissolved when Charlie was died, then someone needed to own the LLC to reinstate it. And somebody needed the LLC to exist to collect the insurance money and also to pay back the loan, okay? Because someone needed that $25 to $50 million. That's exactly why. Because the only way to make all of this happen was to give Erika Kirk, I'm losing my voice over this, was to give Erika Kirk the title. That's the only way. You were going to give it to Mikey? You're going to give it to, who are you going to give it to? Boyer? Oh, so now this is starting to make sense, but it is so corrupt. So let me tell you exactly what violation is set here specifically, because this is important. After everything I've showed you isn't just questionable, okay? It may be illegal. So the violation under section 501c3 of the Internal Revenue Code, tax-exempt organizations are prohibited from allowing any part of their net earnings to inure to the benefit of any private shareholder or individual. That's called private inurement. It's an absolute prohibition. It's an absolute zero tolerance. The IRS defines inurement as an insider, an officer, director, key employee, or any related to them unfairly benefiting from a nonprofit's resources by virtue of their position. Let me read you what qualifies from the IRS own documentation. Loans to insiders, excessive compensation, paying more than fair market value in exchange for goods or services provided by an insider. The penalties for such are similar in all, okay? Under section 4958 of the Internal Revenue Code, the IRS can impose what are called intermediate sanctions, excise taxes, and penalties. And they don't just hit the nonprofit, they hit the individuals themselves, the people who benefited, and the board members who approved it. Because remember, board members approved this. Look, approved by board committee, yes or no? Yes. Written agreement, yes. All right? Don't forget this. So their first tier of tax, 25% of the excessive benefit paid by the disqualified person who received it. There's another second tier. If the violation isn't corrected within the taxable period, an additional 200%, that's not a typo, 200% on top of the 25, organization manager tax, 10% of any board member knowingly participating in the excess benefit transaction, capped at $20,000 per transaction per manager. And if it's not bad enough, revocation of tax exempt status entirely. This is why Erika Kirk is the CEO of Turning Point USA.
The ghost in a platform, backdoor born. Run stealth, Bruce through the blackout storm. Cut those chains and creators mourn. If they silence your voice, we make